Trump calling Fed Chair Jay Powell a fool as the central bank keeps rates steady.
The risk of higher inflation and higher unemployment have risen.
I call him Too Late, Too Late Powell, that's his nickname.
So the Federal Reserve is about to pump crypto and stocks. You may not believe me, but I'm going to show you solid evidence today of why and how the Fed is going to pump crypto and stocks. They're going to deny it. They're going to be hardline. They're going to say no rate cuts, no rate cuts. We're not doing any QE until interest rates go to zero. And we're nowhere near that right now because interest rates is at 4.5%, 4.25. So until it goes to zero, we're not going to do QE. But there is such a thing as stealth QE, or people make fun of it and they call it not QE, QE. What do I mean by that? This item called SOMA. And basically we can see that in total, they want to raise $109 billion. The primary dealers basically means just the banks. JP Morgan, Goldman Sachs, these are the guys who deal that paper to clients. And then direct bidders are like major buyers of this, like say China or Japan or EU could be the direct bidders. Indirect bidders are basically other smaller banks who buy it on behalf of their retail client. But who bought 14.8 billion of this item called SOMA? The other one I want to look at is this one. This is a 3-year auction, and in total 148 billion been sold, but someone bought $20.4 billion of that. Who was that? The Federal Reserve buying. So this is what I mean by stealth QE. Of course, the Federal Reserve hasn't started QE. They haven't even ended the QT yet.
For the time being, we're well positioned to wait for greater clarity before considering any adjustments to our policy stance.
But then if the net effect, you have increased the amount of liquidity in the US banking system by buying US bonds, even though you say we haven't ended QT yet, we haven't started any real QE program, the effect, the end result is the same. And that's what the Federal Reserve is doing. They're saying, look, I'm not doing a QE program, but yeah, I bought some bonds. Who cares? What difference does it make? I don't care about words. I care about your actions. A lot of Wall Street pros, they like to say, people who say that are dumb. People who say that are foolish. And they'll say this. You don't understand what SOMA means. It's called FOMC. That stands for Federal Open Market Committee. That O and M also stands for open market. There's a caveat to it that people on Wall Street will argue. These bonds are actually not bought by the Fed in an open market competitive bid situation like in QE. The Federal Reserve is just reinvesting or rolling that debt. 3 years ago, the Federal Reserve bought $20 billion of these bonds. And today they're due. So the Federal Reserve would say, okay, here's my bond certificate. I'll give that back to you. You give me $20 billion of money. That's called QT. The Federal Reserve would take $20 billion out of the market. But instead, what the Federal Reserve did was this. It says, these are my 3-year Treasury bonds. They're due. And I could ask you for my $20 billion back. But instead of asking you for $20 billion and taking it out of the banking system, what I'm going to do is I'm going to roll this and just give me your new 3-year Treasury bonds. We'll put these away and you give me these new ones. So I'm lending you $20 billion for another 3 years. You keep that $20 billion. I'll ask you in 3 years' time when it is due. That's essentially what happened. They could say that there were too many bonds that was maturing. The Fed didn't want to do that much QT. Therefore, they let some of the bonds roll off, but kept on rolling some of the other bonds. Now, I think that's very sus because this is the US asset balance sheet. This is when the Fed is printing dollars. This is when they're doing quantitative tightening, QT, and taking money out of the system. And this number is updated every Thursday if this number ticks up or not. If it starts ticking up, they can say they're not doing QE as all they want, but that's actually QE. So that's the number we need to watch out for. And the reason why I'm bullish on Bitcoin and crypto and stock, I've said to you guys many times in my Discord and on social media, there's something like 6.5 trillion US dollars of US Treasury debt that is coming due. And usually they would, by now, they would start asking like the biggest buyer, what can I have you down for? 100 billion from China, 80 billion from Japan. Okay, that's how they stack up their buying order. But however, this time, because of the trade war, China's obviously not going to buy any. If anything, they're going to not sell, but just let maturities roll off. Japan has been selling already, not buying, selling. And Japan's the largest holder right now, foreign holder right now. If no one's buying, then price crashes. Price crashes, and then the yield jumps up to like 4.5, 5%, 4.5 or 5%, something like that. And that's really bad, like 5%, because it means you eventually, you can sell the bond, not sell at the price you want, but sell it much cheaper. You get the money, but when the prices go down, the yields go up. And then essentially it means United States is borrowing money at very high rates, like 4.5, 5%. Could even go to 5.5%, 6%. So what I'm saying is, for the sake of saving the US Treasury, saving the US dollar, I think the Federal Reserve is going to have to come in and take maybe 10% or 20, 30, 40% of those bonds. We're talking $6.5 trillion, not a billion, $1 trillion. That's 1,000 billion, it's a trillion. So when that happens, I don't care what you say about not QE, no QE, that is going to be called QE in anyone's books.
I will be going to Switzerland, and the negotiations will begin on Saturday.
U.S. Secretary of Treasury Scott Bessent just announced that he's going to be talking to the Chinese team on Saturday, and that's obviously huge news. As I've been saying, guys, the Federal Reserve is not going to be willing to cut rates or do QE or even end QT, which is quantitative tightening, until Trump walks back majority of his tariffs. Because those tariffs, not even the Chinese ones, the ones against Vietnam, Europe, Australia, they will just push up prices by 10% on everything that's imported into the US. Basically, when it hits the shelves, it's going to go up 10% at minimum. When it hits the manufacturers, that increases their cost. So inflation is coming in that case, and the Federal Reserve is right to be worried about it.
Are you open to pulling back your tariffs in order to get China to the negotiating table?
No.